Global manufacturing SMI and global services SMI also fell to record lows of 53.0 and 54.5 respectively. Product sales index also declined for the 8-month running to its lowest pace since February 2014. The prices index edged down to 51.7 from 52.0 the previous month, while the staffing index also dipped slightly to its weakest pace in 3 years. And Saudi Arabia has announced plans to shrink a record state budget deficit with spending cuts and a drive to raise revenues from sources other than oil. Saudi Arabia, its finances hit by low oil prices, announced plans to shrink a record state budget deficit with spending cuts, reforms to energy subsidies, and a drive to raise revenues from taxes and privatization. Our 2016 budget, released by the Finance Ministry on Monday, marked the biggest shake-up to economic policy in the world's top crude exporter for over a decade and includes politically sensitive reforms from which authorities previously shied away. The plan suggests the kingdom is not counting on a major recovery of oil prices anytime soon, but it's instead preparing for a multi-year period of cheap oil. The International Monetary Fund warned in October that Riyadh would run out of money within 5 years if it did not tighten its belt. Well, the year is gradually winding down. Let's talk to Conrad Boson, standing by on the floor of the Frankfurt Stock Exchange, to tell us how the market is preparing to bid farewell to 2015. Hello, Conrad. Good to see you today.
I'm not sure whether you...
Hello, Conrad.
I can't hear you.
Are you hearing me, Conrad? Oh, well, we seem to be having some kind of problem there getting to Conrad. But let's look at this report from Russia. The debt dispute between Russia and Ukraine is unlikely to be reconciled before being brought to the International Court of Justice. And that's according to a Russian specialist in Ukrainian affairs. For Ukraine's $3 billion sovereign debt, Russia had planned a debt restructuring, allowing Ukraine to repay $1 billion each time between 2016 and 2018, with a guarantee of the European or US government or international financial institutions. However, no party has been willing to provide the guarantee. Let's see this report.
Ukrainian Prime Minister Arseniy Yatsenyuk announced last week that his country would suspend the repayment of the $3 billion debt to Russia. Then Ukrainian new finance minister Natalie Jaresko said Ukraine was ready to negotiate with Russia over the debt in the hope of reaching reconciliation before a lawsuit. And Yatsenyuk also said Russia needed to cut the debt by 20% and extend it for another 4 years if Russia wanted Ukraine to repay the debt. But Russian specialist in Ukrainian affairs, Dmitry Kulikov, said that Ukraine had turned down the Russian offer and Russia was unwilling to lose its interests. Therefore, the two countries were unlikely to reach reconciliation before a lawsuit.
Ukraine
has turned down the Russian offer and failed to present a reconciliation proposal. Russia has put forward a proposal not only to Ukraine but also to some Western countries, which should watch the Ukraine government as its partners. However, both Ukraine and Western countries refuse to accept this good proposal. At the same time, I don't think Russia will accept conditions unfavorable to itself.
Meanwhile, the International Monetary Fund changed its credit rules in early December to allow debtors to breach the sovereign debts. This changed rule would allow the IMF to continuously provide debts to the countries which are unable to repay sovereign debts. Russia was angry at this move and believes the IMF move was designed to help Ukraine out of political moves. Kulikov believes the Russia-Ukraine debt dispute has become a political tool in the gamble between Russia and Western countries and the IMF move will bring serious consequences.
The debt dispute already now carries a political stain. In other words, a mainly economic or financial problem has gradually evolved into a tool for political gambling. For example, the IMF changed some rules which may have serious consequences, because it concerns not only Ukraine but also Greece and some other European countries that have huge debts. This has set a dangerous precedent because the breaching countries can refuse to pay their sovereign debt without being published. This move is clearly politically motivated.
Some Russian analysts believe the Western countries, led by the United States, may take advantage of the Russia-Ukraine debt dispute and impose additional sanctions on Russia.
Anything can be used as an excuse for imposing additional sanctions on Russia. While the United States says it should cooperate with Russia in fighting terrorism and on the Syrian issue, it still expanded sanctions list against Russia. Therefore, we are not so worried about it. No matter how Russia acts in the global political game, it has to safeguard its own interests.
However, Dmitry Kulikov believes it is not going to be easy, but the country is ready now.
Well, I guess my colleague Conrad Busen, standing by at the Frankfurt Stock Exchange, is ready to talk to me now. Hello, Conrad. Hello, Conrad.
Here in Frankfurt, pretty well, Jimmy. The German DAX is getting a bit of a tailwind, so to say, because international investors are playing the big stories of the year once more, which is very generous monetary supply by the central bank, in addition with cheap oil, which is of course something that is helping consumption here in Germany and of course our businesses as well. And this fueled demand for European stocks on this day before the last trading day of this year. Some of the German stocks are particularly in demand because investors are betting on higher dividends that they expect for next year. The 30 companies that form the German stock index DAX alone are expected to pay out an amount of 31 billion euros in dividends next year. That would be another record high and 1 billion more than last year. So the German market here, the stock market in Frankfurt, which already has gained a bit more than 10% in the course of this year, is getting another nice little boost today.
Conrad, if you're hearing me very well, Saudi Arabia, the world top crude exporter, has just released a more tight-fisted budget for 2016, reflecting scaled-back revenue expectations and lower spending on subsidies because of sinking oil prices. Now, for most analysts, the plan suggests the kingdom is not counting on a major recovery of oil prices anytime soon, but it's instead preparing for a multi-year period of cheap oil. We have seen oil prices come down as low as $37. How are investors gearing up for this in the coming year?
Well, of course it makes people wary about what to expect for the commodity exporting and oil exporting countries in the course of next year. I mean, you mentioned Saudi Arabia. The budget deficit there is now at 16%, and that's not sustainable, which means that Saudi Arabia is not expected to be able to run such a high deficit in several years in a row. Or take Russia. The president there, Vladimir Putin, promised his people recently that the Russian economy had put the economic crisis behind it. But what he didn't say was that the projection for next year's gross domestic product or economic growth and also for the state budget next year all reckon with an oil price of around about $50 a barrel. Now, with oil being as low as 37, of course, this shows that all these projections are very, very speculative. And I guess, well, you are sitting in Nigeria, an oil exporter, and the country will probably have the same problems as well.
Right. Busen, Disney is in the news. The Star Wars movie, that's The Force Awakens, hasn't really helped the stock price of the Disney company which produced the movie and markets it. Why is there no reward from the side of investors?
Well, you know, the Walt Disney Company is a huge corporation, and the problems that Disney has in some parts of its business are so big that the very strong billion US dollar sales with the Star Wars movie just couldn't make up from them. What I'm talking about is the problems that Disney has in the TV cable business with its sports outlet ESPN. Disney for a long time had some sort of monopoly in the North American cable TV business. But now it's losing subscribers. Less and less people in the United States want to watch sports via cable TV. They prefer streaming services like Netflix and others. And that means that the high investments that Disney had made into sports events, baseball, American football, basketball, they're becoming less and less profitable. It's going to be interesting to see next year how this technology-driven change will develop and how it will affect the businesses of cable TV companies and like ESPN and its mother companies like Disney.
All right, thank you very much, Conrad. Do have a beautiful day today. That was Conrad Bussen, DWTV Channels TV correspondent reporting from the Frankfurt Stock Exchange. Now let's take a quick break. Now when we come back, we will be looking at the issue of the shrinking Lake Chad Basin. Do stay with us.